The Q2 FY24 earnings of major IT companies in India are out, and they are positive on margins and deal wins. This is on the backdrop of reduced revenue guidance for this year by the IT majors due to the global economic slowdown and a decline in discretionary spending by clients. India's biggest IT company, Tata Consultancy Service, indicated a moderate growth outlook for FY24. It saw a notable 8.7% rise of profit after tax at Rs 11,342 crore in the September quarter compared to Rs 10,431 crore in the same period last year. Total revenue of TCS increased by 7.9% year-on-year, reaching Rs 59,692 crores in the September quarter. However, the sequential revenue growth was marginal, with only 0.5% increase in the second quarter of FY24. India's second largest software exporter by revenue, Infosys' profit after tax increased by 3.2% year-on-year and stood at Rs 6,212 crores in Q2. The company marked a year-on-year revenue growth of 6.7% at Rs 38,994 crores. But Infosys has lowered its FY24 revenue guidance to 1 to 2.5% in constant currency terms from 1 to 3.5%. In the second quarter of this fiscal, profit after tax of HCL Technologies saw a rise of 9%, reaching Rs 3,833 crores compared to Rs 3,487 crores during the same period last year. HCL Technologies achieved an 8% year-on-year increase in revenue, reaching Rs 26,672 crores in Q2.
Discretionary spend is not happening as we have expected. And that has created a little bit of negativity at this point in time in the IT services market. And hence that you can see that the forecast and the predictions done by some of the IT companies may not be in line with what we would have expected.
In two aspects, EBIT margin and total contract value, the September quarter was positive for the major IT companies. In the September quarter, TCS saw an EBIT margin of 24.3%, Infosys 21.2% and HCL Tech 18.5%. In terms of total contract value, the Q2 was positive for the IT firms as the clients were focusing on the cost optimization initiatives. TCS won $11.2 billion deals in Q2, which is a 38.3% increase compared to the last year. This includes the two large deals from BSNL and Jaguar Land Rover. Infosys saw an increase of total contract values by 180% in the September quarter by winning deals worth $7.7 billion. HCL Tech also reported record high deal wins worth $3.97 billion, which is a 65% year-on-year increase. But the IT majors have witnessed a decline in headcounts due to delayed decision-making and reductions in clients' discretionary spending. In the second quarter of FY24, TCS headcount declined by 6,333, while Infosys and HCL Technologies saw their headcounts decrease by 7,530 and 2,299 respectively. Experts believe that the trend will impact salary hikes in the IT firms this year.
The slowdown in the demand for resources has been there for quite some time and is going to be there. This particular thing is more of a correction at this point in time. But if you look at the way the AI and the shift from labor to technology arbitrage is happening, the dependency on humans is going to reduce significantly over a period of time. And Gartner is predicting that 2025 to 2040 era will be of autonomous business where everything is automated, even the decision-making process. So it's going to go down further.
So what messages are the Q2 results sending about the performance of IT companies in the coming quarters of FY24?
This all deal wins are for longer term period, for 3 years, 5 years, 10 years period. So for shorter term, clients are not keen on spending as of now, and that took a backseat for them, and that's why that did not get translated to revenue. So all these deals, pipeline is strong, but whatever deals they have won, that is not getting translated to revenue in the shorter term period. But this will get translated to revenue in a longer term period. So that is what the all this is about. That the deal pipeline is always strong for the IT sector.
Experts believe the current slow growth in the IT sector is temporary, attributing it to a slowdown in client spending. Indian IT firms are winning more deals, and client hesitancy regarding discretionary spending is expected to fade, leading to a positive outlook in the upcoming quarters.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.